I think it was really interesting. I think a lot of people initially, when you saw those S&P futures open up last night, the Mnuchin put that we're already calling it here in Chicago, that was not taken in the best way initially. But I think at the end of the day, they are trying to tell you that they are going to be supportive of this market. We have seen absolute carnage in the S&P 500. We are back down to a level where I think stocks get very attractive. So right now on Christmas Eve, I think you bring out the buyers list because we have not seen that Santa Claus rally. But right now I think Mnuchin is playing the role of Rudolph the Red-Nosed Reindeer. Remember on that foggy night, Sully? Mnuchin, in the same way Rudolph, is going to light up the sky a little bit here and help some buyers come into these markets.
You really believe that? Because there's been a lot of talk. Was this some sort of a call about firing Powell, but you needed covers, so you had to figure out something else you could officially put out as a statement? You think maybe what do they call it, the plunge protection team is being put back together, and this was some kind of a message to market participants that we have got your back in the U.S. government?
Absolutely. And what did we see for all the years? We saw Janet Yellen articulate the fact that we do have your back. Now Powell is a little bit more down the middle of the plate. Therefore, I think it's a 1-2 punch. They are trying to calm markets, but they're also trying to let you know, and that's in the bottom part of that release from the Treasury, that they are putting together this team. They will be supportive. They will find a way to move markets higher. So I think if you've been hiding underneath your desk, very afraid of the price action, and there's reason to be afraid, Sully. We saw some of the highest volume trading last week. We saw a 7% drop in the S&P 500, but I think it's time to come out from underneath that desk, buy some of these stocks that make a lot of sense and fit in your portfolio moving forward, because now, for the first time, we're seeing, when's the last time, I guess my question to you, when we saw a Secretary of Treasury come out and say the things he did over the weekend?
Well, it was 10 years ago, and it wasn't good. The reason that people put those kind of statements out a decade ago is that there was actual concern about it. It was like, Jeff, we used this analogy earlier in the show. You're sitting around the table, and all your family's there, and the Christmas goose, and you go, don't worry, the house isn't going to catch fire tonight. And everyone's looking around going, nobody talked about the house catching fire tonight. Well, but now you know what they're thinking about? The house catching on fire.
I hear you, but we're in a very different spot. Let's remember, earnings are in a very strong situation. We are continuing to be concerned about forward guidance with all the trade tariff conversation, but at the end of the day, earnings are strong. Historically, rates are still low. We're seeing unemployment at a low point. So right now, I get the fear. I get the fact that 2017 was a very different year. It was an anomaly when it went straight up. So yes, it's healthy to come back. But after a 20% drop in the NASDAQ, you're seeing names like Amazon under $1,400, Microsoft under $100. Stocks are on sale. Don't be afraid. I think this is a great time to allocate. Yes, you have to have a little bit longer term kind of perspective here, Sully. But at the end of the day, you don't see sales like this on stocks too often.